It's important for us to understand that the current ecosystem in Tanzania does not present a single standing law that supports or covers private equity or venture capital. So as a result, we do have a necessary route of using common, ordinary, or standard corporate structures to finance, regulate, or assist operation of a sector that is not ordinary. That is where we are. Startups, MSMEs, and various innovation activities are forced to be operated or rather regulated by an ecosystem or structures that are not conducive for the needs that the startups and innovation sector are. You do have issues such as double taxation, complex operations issues, disadvantaged or discouraged financing factors, and multiple processes or bureaucracy that in general frustrate innovation and startup financing or startup growth in the sector. Last year, there are guides, draft capital markets and securities, private equity and venture capital regulations. The intention is to assist the operations and regulation of the PE and VC space in Tanzania. Unfortunately, these are not yet functional and we are still waiting their formal enactment and significant steps towards their operations, at least steps in the right direction. What you need to understand is that the tax position that affects the startup and innovation ecosystem is not necessarily a problem that it cannot tax the startup sector. The problem that we have is a problem of tax design. What we are seeing is a design that affects, or rather it's not conducive to the space that innovation, startups, and other sectors that are supported need to have. So if you look at the last column, you'd see that where we are practically with regards to all of those indicators. We are a minor destination compared to Kenya and other regional players. Most funds, asset heavy and regulated sectors, not high growth VC at scale. Most funds investing in Tanzania are domiciled offshore, or even deals that we are seeing, most of them are happening at group level, and parties or startups or players that are in the market are only getting segments and portions of those fundings. We need more and more funds that are actually set up in Tanzania. I wanted to give you a bit of a distinction between these types of structures for purposes of operations. A normal company, the way it's structured and what it means in terms of distinctiveness or separation of the shareholders from the company. A company, when informed, is separate from the people that are making it, the shareholders. So we create what we call a separate legal entity, and liability of all members, shareholders, enjoy limited liability. The governance is very rigid in terms of how the structure is. There's a board of directors that operates it. They act as the fiduciary officer, the principal officers of the company. And the other issues there are that the major drawback is that company pays taxes, a corporate tax at 30%, and also there is tax at the point of distribution of shareholders when they get dividends. And then you have trusts, which are there, and then you have partnerships. However, the partnerships that we do have has unlimited liability, the partnerships that we do have. What do we mean by unlimited liability is that the partners that are making the company or the partnership, the firm, do have the same liability as what the business. This means if there are issues affecting the business, it will also visit or affects the partners. Now, limited partnerships presupposes a structure where the ones who are making it, the ones that are investors, will have no liability from the organization, LLPs. The essence of this is to have limited liability, tax transparency, and less operational administration that can support VC and PE growth in a country. So when you have a limited liability partnership, you create more flexibility between the operations of the organization and the regulatory component of matters that are passing through that entity. The advantages of them include tax neutrality, whereby these entities are seen as not operating in themselves or profit making in themselves, but rather pass through for profit generation between third parties and companies which are invested into, the likes of startups, innovation, etc. So the issue here again is that these companies are very flexible and easy to facilitate investment. This drawing here, this diagram, explains how the structure of an LLP could operate. What we do have right now is simply where the PE fund is and portfolio companies that are all deemed as operating and taxable entities. So tax is currently, for example, taxed at every point there. So if you create or you allow an LLP, limited liability partnership in the law, what happens is that you allow the last side on the top left to be part of the play in terms of operations. And what that means is that for operation purposes, the private equity fund at the middle is simply a pass-through. Gains that are coming to that organization will not be taxed at that point. Right now, gains will be taxed at every point. And if there are shareholder investors now, the institutionals, the family offices, your likes of DFIs, etc., at that corner, right now, under Tanzanian law, they are being taxed as a corporate tax at 30%. And then distributions to the investors are also taxed at 10% as dividends. That is the current position of the law. Gains from invested portfolio companies will not be taxed at the private equity level, but will be taxed at the investor level as distributions in the country, because there is no double taxation to begin with, among others. So to simply break it down with regards to what needs to be done for purposes of facilitating the same is, number one, eliminating pillar one, which is liability. These are the key pillars that we have to focus on. We need to make sure that there is a limited liability for partners in this funding structure to facilitate PE and VC frameworks. So the current structures, like I've said, they're not. So what regulatory imperative do we need to do in Tanzania to facilitate that? We need to enact a dedicated limited partnership legislation to legally separate general partners who are in current structures controlled into limited partnership passivity. That is what we definitely need to do, because currently any VC operates like any company, and in a manner of speaking, immediately that VC is formed, it's subjected to the same taxing and administrative bottlenecks that any other common company is facing. Secondly, it's the issue of tax, which with fiscal transparency, we need to amend the Income Tax Act, among others, to grant clear pass-through status for approved fund vehicles. We need to definitely create a pass-through status in our taxing laws. Governance, we need to harmonize beneficial ownership reporting and streamline registration compliance journey for fund managers. For issues related to funds and DFR, investors under the arm, there will be a lot of reporting for purposes of beneficial ownership reporting, because there are many funders, there are many investors, let's say angel investors network. So definitely our law will also need to be harmonized in terms of beneficial ownership reporting under the umbrella of the fund managers. One thing that I have to finalize with is the fact that the countries that have limited liability partnership laws seem to be ahead of the rest. Kenya is ahead of the rest. Nigeria, and the funny thing about Nigeria is that the LLP infrastructure or law covers only Lagos. So you can actually streamline a region, a part. I don't know, the Silicon of Tanzania, Silicon Zanzibar. So stuff like that can happen, and then we can actually facilitate investment coming into the country. Thank you.
So Harriet spoke about how they expect the firms to be incorporated. What is the expectation of so many people that we need to have a general partner, we need to have a limited liability partnership in place, and at the moment we don't have that. I believe that Brella is working on it, because issues on issue of partnership, issues of company registrations are all under Brella. So we trust they're working on it, and in the near future we'll have that structure in place that will be accommodated later when we have to amend the regulations after being promulgated, so that to cover the issue of limited liability partnership. But it was thought better not to wait. We can use whatever that we have on the ground just to get started with the venture capital and private equity business in Tanzania. So after many discussions, we thought it was better to use what we have at the moment in capital markets. We have fund managers, but those fund managers, since we don't have that structure that has been discussed with several speakers, we thought better to use what we are using in terms of licensing fund managers. How do we register them? So basically, at the moment, we do register fund managers. I know many, you've heard of UTT, you've heard of Tumishi Housing. They're all fund managers, they're running funds. So we thought it was better to use the same structure. So the first thing that a fund manager needs to do is first register the company. So we use a normal registration, the company registration and umbrella. And then you need to have a minimum paid up capital, which will be always prescribed by the authority after the regulation being published. And having looked at other jurisdictions and how these funds are operating, we thought it was better for the manager to have some stake, some interest in that fund also. And I believe you all know that in terms of a general partner and other partners in the venture capital business. And also on issues of governance, we need them to have a board of directors, which we need also to have independent directors. And also to make sure that whatever that they're doing, their MEMAT has to explicitly provide that they will deal with the provision of capital to small and medium enterprises in Tanzania. So they have explicitly to say that, thank you, in their MEMAT, so that we know that they'll actually be running the venture capital firm. In terms of application, those are so many things, but they are not big things. Those are normal things. It's just a certificate of incorporation. They said you need to have that. You need to have a MEMAT to be registered by BRELA, and they said primary objective to support the SMEs. You need to have an audited financial statement. statement, and this is basically for those that have been existing, because this regulation also register fund managers, licensed fund managers that have been existing in Tanzania and they did not have a place to be registered. So if you've been existing for quite some time, then at least we see your audited financial statement and see that you are sustainable enough to run the business that you intend to do. And have investment policy. In investment policy also, you have to identify what you'll be doing in your business. And again, you need to say that will be providing capital to SMEs. You need also to have a custodian. You need to have a custodian. A custodian is it's just a bank. Tunasemaga ni mtunza dhamana, ni mtunza fedha tu. It's just a bank. You need to have a certain custodian. We want to see that you don't operate through MNOs. We want to see yani uko kwenye mfumo unaojielewa. Kwa hiyo you need to have a custodian, and the custodian is a commercial bank. They are licensed. There's so many of them. They're like 7. The normal banks, NMB, StanB, CRDB, the normal ones. So it's not something big. And also a declaration of the directors. And also, at least we see that you did approach some people. You want to run a business, you did approach some people, you have investors, at least 2 or 3, even 1. We need to see that you did approach some investors. There will also be some fees. Sio kubwa, ni kadogo to just to facilitate the whole application procedure. In terms of evaluation, normal evaluation, we just look upon your submissions, and it's going to take maximum 45 days. Hii ni charter tu tumetumia kwetu, but it can be even 2 weeks, it can be 1 week. The only thing inakuja kuleta tatizo during licensing, during registration of funds, ni compliance issues. I tell you to do this, you take 2 weeks, 3 weeks. You bring your document, you want to be out by tomorrow. So it's just compliance. If you comply with everything, then it takes less than 14 days to be licensed. And then you also will be given conditions, terms and conditions on how to operate. And basically the terms and conditions will become for the regulation that will be published already. After that, you'll be licensed. And when you're licensed, then you can proceed now with managing the fund. And also, after licensing, there are some changes that you can be done. Maybe shareholder anatoka, anakuja mwingine. Those kind of changes, then you have also to notify the authority. There are several obligations of fund manager, and this is just to ensure that the fund is sustainable, the manager is sustainable, the investors are protected. So hizi obligation ni za kila siku. You need to have an investment policy, as I said before. The constitutive documents, you need to have them in place. Terms of management agreement. Because you're running a fund, obviously you must have terms. Fees, how you're going to charge the investors. Ile ni kazi. Kwa vile zile terms and conditions, you need to know if it is 0.02, if it's what. You just state it. And the investors need to know that, because they're putting their money in that fund. And also you need to abide with the Act and other applicable laws. Kuna issues of data protection, kuna issues of AML, vitu kama hivyo. As a manager, you need to make sure that you abide to that. And saa zote unaangalia interests za ile asset unao manage. Issue of disclosing to the investors any material nanili changes, issue of prepare interim financial statement. When you talk about capital market, you talk about disclosure-based a system. You need to make sure that all time investors are well informed whatever that is going on in whatever that they've invested in the fund and in the company. They have to make sure that they are well informed. And also you need to abide to the AML CFT regulations. It's known worldwide. And there are situations that the fund manager license can be revoked by the authority. Hii inakuwa to the extreme, lakini not all times. Kuna vitu vingine you can reprimand, you can suspend, depends na extent ya tatizo liloko katika operations of fund managers. So there are situations that this license can be revoked when you fail to comply with the condition of the license, when you fail to comply with the directives of the authority. Maybe you're supposed to submit this, you did not submit. You fail to act in the best interests of the investors. You need to act honestly and fair at all times. So basically, the fund have to be authorized by the authority, CMSA. That is CMSA. That is the structure that we have in place, the draft regulation that we have in place. And also the fund has to have a manager. Okay. The fund has to have a manager and a custodian. I've said it before. And those two have to be independent of each other. In terms of allocations, mainly we expect that this fund will be investing in unlisted securities of startup, pre-seed, emerging, or early stage companies. So basically, we intend that this fund to be investing in unlisted securities. And if it happens, there are some thresholds that have been provided in the regulations. If it happens that there are some funds that have been unallocated, then there's a threshold that has been set, a very minimum threshold, that the fund can be invested maybe in money markets, prior waiting to be invested in prior waiting to be invested in the unlisted security, then can be invested in other areas. But mostly we encourage money market because it's a short-term investment, so you can retrieve the fund the fastest way you can get. Then we need to do the normal verification of the funds. Mtu akileta investor lazima ufanye due diligence, ujue hela zimetoka wapi. These are AML issues, I've addressed them before, so they're very straightforward. There are sanctions that can be done. So I said before, in terms of reprimand, suspension, those are the normal sanctions, those are administrative sanctions that can be done. And ikienda kwenye extent kubwa, then it can be revoked. But upon revoking the license of the manager, some procedure will be followed to ensure that the invested assets are protected. Ambazo ziko manager na that manager or the firm that ilikuwa ina run ile fund. My final note, I'll just say that together we can build a more effective, collaborative and competitive BCP ecosystem Tanzania. Kwa hiyo karibuni sana CMSA. Feel free, the doors are open, and we hope to see your applications as soon as the regulations are being published. Asanteni sana.
Thank you.